You finally saved $1 million for retirement. But what if 1 million isn't enough?
$1 million sounds rich, until you realize it may need to fund 30 years of your life.
The $1 million retirement problem nobody talks about. Imagine waking up one morning and discovering that you finally have $1 million sitting in your retirement account. For decades, you've worked, saved, invested, and sacrificed. You finally reached the number everyone told you would change your life. $1 million. You might think, I made it, I'm financially free. But here's the uncomfortable truth. $1 million may not be enough to retire the way you think it is. And the biggest problem isn't simply inflation. It isn't even the stock market. The real problem is that most people think about retirement as a number instead of a system. They focus on how much money they have, but not how much they will actually need, how long that money must last, or what happens when life doesn't follow the plan. Today, we're going to break down the $1 million retirement problem and why reaching $1 million can be both an incredible achievement and a dangerous illusion of security. The $1 million illusion. For years, you've probably heard a simple idea. Save $1 million and you'll be set for retirement. It sounds logical. If you have $1 million invested and you withdraw a small percentage every year, you should theoretically have enough to live on. But there's a problem. $1 million doesn't have the same meaning for everyone. A person living in a low-cost area with a paid-off home may be able to live comfortably on a modest annual income. Someone living in an expensive city with rent, healthcare costs, taxes, and financial responsibilities could burn through that same million much faster. So the question isn't, how much money do I have? The better question is, how much income can my money safely produce for the rest of my life? And that changes everything. Problem 1, $1 million doesn't mean $1 million of spending money. Let's say you retire with exactly $1 million. That sounds huge. But you don't simply have $1 million sitting in a checking account waiting to be spent. Most retirees have their money spread across investments and retirement accounts. That money has to continue supporting them for potentially 20, 30, or even 40 years. And that's where the withdrawal problem begins. Suppose someone withdraws 4% of a $1 million portfolio. That's about $40,000 in the first year. At first glance, $40,000 might sound reasonable. But remember, that's before considering taxes. Depending on where the money comes from, withdrawals may create taxable income. And then there are healthcare expenses, housing, insurance, food, transportation, and everything else. Suddenly, that $40,000 doesn't feel nearly as large. And there's another issue. Your expenses don't stop just because you stop working. In some cases, they actually increase. Problem 2, retirement could last longer than you think. One of the biggest mistakes people make is assuming retirement lasts 15 or 20 years. But imagine retiring at 60 or 65. You could potentially live into your 80s, 90s, or beyond. That means your retirement portfolio might need to survive for 25, 30, or even 35 years. Think about that. You could spend more time in retirement than you spent in some of your previous careers. This creates a massive challenge. Your money doesn't just need to be enough today. It needs to survive decades of inflation, market volatility, taxes, and unexpected expenses. And the longer your retirement lasts, the more important those risks become. Problem 3, inflation quietly destroys purchasing power. Here's something most retirement calculators make people underestimate. Inflation. Imagine you retire with $1 million today. It sounds powerful. But what happens to the purchasing power of that money over several decades? If prices continue rising, the same amount of money buys less and less. A retirement budget that looks comfortable today may feel completely different 20 years from now. Your groceries can cost more. Housing can become more expensive. Insurance premiums can rise. Healthcare can become significantly more expensive. And even small annual increases can compound over time. That's why saying I need $1 million isn't enough. You need to ask, $1 million in today's purchasing power or $1 million decades from now? Those are very different numbers. Hash problem 4, healthcare can destroy a retirement plan. Here's one of the biggest retirement expenses people underestimate. Healthcare. Even after Medicare enters the picture, retirees can still face premiums, deductibles, prescriptions, dental care, vision care, long-term care, and other medical expenses. And healthcare costs are difficult to predict. You could create a perfect retirement budget, and then one major medical event could completely change it. That's why retirement planning shouldn't only answer, how much do I need for my normal lifestyle? It should also answer, what happens if something goes wrong? A strong retirement plan needs a safety margin. Because life doesn't care about your spreadsheet. Hash problem 5, the sequence of returns risk. Now we get to one of the most important concepts in retirement investing. It's called asterisk sequence of returns risk asterisk. Here's a simple example. Imagine two retirees both have $1 million. Both experience the same average investment return over several decades. You might assume they'll end up in roughly the same place. But they might not. Why? Because the timing of those returns matters. If the market crashes heavily during the first few years of your retirement, you're withdrawing money while your portfolio is falling. That means you're selling investments when they're worth less. And once those shares are gone, they can't participate in the recovery. This can permanently damage a retirement portfolio. Someone who experiences the same market crash later in retirement could have a completely different outcome. That's why retirement isn't just about average returns. It's about when those returns happen. Hash problem 6, people forget taxes. Here's another uncomfortable reality. The number on your retirement account isn't necessarily the amount you can spend. Suppose your retirement account shows $1 million. Depending on the type of account, some of that money may eventually be subject to taxes. So psychologically you see, $1 million. But financially you should think, how much of that can actually become spending money after taxes? That's why retirement planning should consider the tax structure of your accounts. Traditional retirement accounts, Roth accounts, taxable brokerage accounts, Social Security, and other income sources can all interact differently. The goal isn't simply to accumulate a giant number. The goal is to create sustainable after-tax income. Hash problem 7, your lifestyle is more expensive than you think. There's another problem that doesn't get enough attention. Lifestyle inflation. Imagine you're earning $120,000 per year before retirement. Over the years, you've become comfortable with that lifestyle. You travel. You eat out. You drive a nice car. You live in a comfortable home. You pay for subscriptions. You help your family. Then you retire. Your income suddenly falls. But your lifestyle doesn't automatically fall with it. This is where many people discover that their retirement number was based on an unrealistic assumption. They plan for retirement using a generic percentage, instead of calculating what they actually spend. And that's a huge difference. So is $1 million enough? The honest answer is, it depends. For some people, $1 million can provide a strong foundation for retirement. For others, it may not be enough. The number depends on several factors. Where you live. When you retire. How much you spend. Whether you own your home. How much Social Security income you receive. Your healthcare costs. Your investment strategy. Your taxes. And most importantly, how long your money needs to last. That's why copying someone else's retirement number can be dangerous. Your retirement isn't their retirement. The better way to think about retirement. Instead of asking, can I retire with $1 million? Ask 4 different questions. Number 1. How much do I spend every year? Not how much you wish you spent. How much you actually spend. Number 2. How much reliable income will I have? This could include Social Security, pensions, rental income, or other sources. Number 3. How much does my portfolio need to provide? If your expenses are $70,000 per year and reliable income covers $30,000, your portfolio needs to help cover the remaining $40,000. And number 4. What happens if the market crashes right after I retire? That's the question most people don't want to answer. But it's one of the most important. The real retirement goal. Maybe the biggest lesson is this. Retirement isn't about reaching a magic number. It's about building a financial machine that can support your life for decades. $1 million is not a retirement plan. It's an asset balance. A retirement plan needs income. It needs flexibility. It needs a strategy for bad markets. It needs protection against inflation. It needs room for healthcare costs. And it needs a backup plan. Because the goal isn't to become a millionaire on the day you retire. The goal is to avoid running out of money while you're still alive. And there's a huge difference between those two goals. What you can do now. If you're still years away from retirement, this is actually good news. You have time. You can increase your savings rate. You can invest consistently. You can reduce unnecessary debt. You can build multiple income sources. You can learn how your retirement accounts work. And you can periodically calculate whether your future spending matches your future income. You don't need to predict the exact future. You just need to build enough flexibility to survive different futures. Because the market will go up. The market will go down. Inflation will change. Your expenses will change. And your life will change. The strongest retirement plan is one that can adapt. Final thought. So the next time someone tells you, just save $1 million and you'll be fine. Don't automatically believe them. Ask a better question. What kind of life can $1 million actually fund and for how long? Because $1 million can look enormous on a screen. But retirement isn't lived on a screen. It's lived through decades of groceries, housing, healthcare, taxes, travel, emergencies, family, inflation, and everyday life. The real goal isn't simply to reach $1 million. The real goal is to build enough financial security that your money can continue working for you. Even after your paycheck stops. Subscribe for more practical money and investing content. And remember, your retirement number isn't the finish line. It's the beginning of the next chapter. Thanks for watching my video. Please subscribe now.